Good morning, boys and girls. Welcome to our Wednesday morning trading room. My name is Eric Senft. Thank you for joining us. I'm going to give you a real quick overview here of what you're looking at for those of you who are new to our trading room. It's the Diversified trading room, and it's diversified because we're trading the markets from three different points of view. So we have three different tools to capitalize on what the specific market condition may be. Here on the top left, we have the Hawk Micro Scalper. Top right is the Falcon Swing Trader. Bottom left is the Eagle Trend Trader. And the bottom right is the Raptor. The Raptor is the latest addition to the DTS family, and it incorporates elements of the other three trading birds all into one trading tool. Now, the charts I'm looking at on this screen are the NASDAQ. I'm also following gold and crude oil, but I'd be happy to take a look at any market which is of interest to you. I'm sure there's probably more than a few e-mini traders in the room here this morning. Perhaps you want to see a commodity, soybeans or wheat, or maybe you even want to see a currency pairing. We can certainly look at any of those. I've even got access to a few stocks if there's a few stock traders in the room. DTS will work on any chart you can actually plot on NinjaTrader. So all the signals tend to develop in the same way. First thing that happens is you get a warning dot along with an audio alert. This brings your attention to the particular tool. And then when the signal is complete, you get a triangle and a hash mark. That tells you that it's decision time. So you're going to see there's a lot of arrows sometimes at print. We don't necessarily take all these trades. There's certain conditions that we look for. For instance, well, sure, let's do this one right here. On the Hawk Micro Scalper, this is a very high probability trade right here. This is called our first micro-macro crossover signal. And it occurs when the thin line, that's a micro line, crosses the macro line, that's the thick line, and it's the first signal where everything is in sync. So you see we have red trend lines, red filter, red bars, and a red signal. So that's a high probability sell signal for us. That's a signal that you can usually take with a great deal of confidence. All right, we'll throw the Hawk there back on the shelf. The market's just opened up. And okay, got a great question here from Tom. Tom asks, good morning, I have a question. How to synchronize Trailblazer with Superdome? When I place an order on Superdome, it does not show up on the chart with Trailblazer. Thanks. No problem, Tom. Okay, so what Tom's referring to is the Trailblazer. That's this trade management tool here that you see on the right. We've got two different tools. We've got the Trailblazer, which is more of a one-click entry system, and then we have the Trade Manager, which is like the Trailblazer, but it also has this risk component built into the bottom. So, excuse me here a sec. Sorry. Okay, so the Trailblazer, Tom's asking, oh, I better get a Superdome up here. The Superdome, for those of you who have never figured out what that is, that's this little contraption. And you get to it by going here to your file window, and you go to New, and you go to Dynamic Superdome. Dun dun dun! Superdome. Where did I put it now? There it is. Let me get my data flow. And where's my data flow? So the dome is a way that you can enter your trades. You can see it gives you your current market price. It gives you how many orders are trading at that price. And you can see the bid and the ask here on either side. So it essentially gives you an idea of where the market is at. Now you can place buy and sell orders. Let's say you wanted to buy. You can throw in a buy order at the market right there. So we're currently long, and thank goodness we're making some money here, but obviously it doesn't show up on the Trailblazer. And Tom's saying, why not? Why is that not there? Let me put my Trailblazer back on. There. So Tom's saying, why not? Why did that disappear? Or why did it not show the order? Well, this the Trailblazer is actually what is referred to as a strategy. So because it's a strategy, it's not synced with the Superdome, at least not that I'm aware of. Let me try this. I haven't tried this before. So what I've done is I've linked my windows. We're going to just try to buy in again at market. No, still doesn't work. And you're going to notice, I never noticed this before, that every time I close the order, I lose my Trailblazer. So I have to reapply it. It is making note of the P&L though. It looks like it's following that pretty well. Now what should happen is if I place a buy order here on my Trailblazer, I should get that reflected in my dome. Even though it doesn't work by entering on the dome, I do believe it works on the reverse. Let's try it here. Yes, it does. So you see what I've done is I've just bought at market. I hit my buy market button and I have my profit order right there. Oops, disappeared as we're moving away. Let's make this a little bigger maybe. No, we can't. So it works in reverse, whereas I can enter on Trailblazer, I will get my orders on the dome. But the dome, you cannot initiate the order on the dome and have it reflect on the Trailblazer because they're not synced that way. Your orders on the Trade Manager and the Trailblazer do go to the exchange level. So if you do something silly like, well, let's say you choose to refresh or to reload your Ninja script, which is always a bad idea if you're in a live trade. You're gonna notice here that your orders have disappeared, and you may even have heard an order canceled audio alert, but the orders really did not cancel. In fact, they should still be here. Oh, no, it did cancel. Okay, maybe the programmer has put that in as a little bit of a safety. With the Trailblazer, it used to be that if you refreshed your screen, your orders would stay on the exchange level and they would disappear off of your chart. But it looks like that problem has since been rectified. But that's what's going on there, Tom, is that you're linked from the Trailblazer to the dome, but not from the dome to the Trailblazer. If you do happen to refresh your screen and lose your orders, to be safe, I would still go to my control panel and I would flatten everything. I would make sure that I was flat, regardless of what you see going on the screen. I think that's very important. All right. Good question, though. Very good question. I don't think I've ever had anybody ask that. Okay, the tool we're looking at here is the Raptor, and we're just kind of waiting for a decent signal to come about. It looks as though we're kind of stuck in a little bit of sideways mode this morning. Prices have come down through the overnight. Actually, the overnight was relatively quiet. You can see London opened right about here. A little bit of a run up, nothing too dramatic. Kind of drifted sideways. Little bit of a move down, and now we're drifting sideways. People are always asking, Eric, what's the best way to trade a choppy market? Well, best way to trade a choppy market is to avoid it. And one of the strengths of the DTS system is that it quickly identifies when the market is choppy or sideways. When the market is choppy or sideways, this is your best plan of action. Let the market break. There you go. Let the market break out. Let it retest. And then look for your sell signal. Likewise, let it break, let it retest, look for your buy signal. For those of you who are more aggressive, you may choose to buy at the extreme low. You may choose to sell at the extreme high. And it's a viable strategy. It's not one that I do very often. But that is available to you as well. But when the market is moving sideways, really the best thing to do is just let it get outside of that range. Look for it to retest. And then you'll have another opportunity at it. So right now looks like we've broken down through the bottom end of the range. We'll look for a little bit of a retest here. Again, for those of you who are a little bit more on the aggressive side, you may choose to buy into this retest to see if the market will in fact go higher. I don't mean blindly buy in, but maybe, trail an entry. Again, not something that we normally do. It's a little bit more aggressive. We tend to wait for the market to actually produce a signal. This is what we refer to as a double pullback signal, where the market moves into this cloud and the hard edge repels it twice. This is the hard edge here. So the hard edge repels it twice, comes out with a sell signal. That's, again, one of the higher probability signals that we tend to focus on. And it looks like we would have found our first profit target, and the rest of our stops would be at break even now, if you're using a break even trigger, that is. This little tool up here, this is an add-on indicator. This is called the Geiger counter. It's essentially a tape reader. It gives you a history of the time in sales. You can see the market's fairly balanced with a slight bearish flavor through here. No doubt that was when prices tailed off a little bit. You can see our needle has now turned green, so we're getting a little bit more of a bullish flavor, which is what we were anticipating. And then you get this dial that you see whipping back and forth. Well, this dial, I think, is one of the most interesting features of this particular tool, in that it allows you to watch the buyers and sellers, and you get to see who is in control of the market. So when this dial pulls hard over to one side and holds, that shows you that the buyers or the sellers are really starting to dig into the market. So you see how the dial pulled over here to the green side, and it was trying to hold. It's got to get over there and hold for like 2 or 3 or 4 seconds. That shows you some serious buying pressure. So long as it's whipping back and forth, it doesn't show you very much. It shows you that the market's pretty well balanced. And likewise, if it pulls down here to the sell side and holds and holds and holds for about 3 or 4 seconds, that will show you that there's some very active selling going on. And why is that useful, you say? Well, if let's say we took this sell signal and say we chose to trail a stop, see how the dial's pulled over and it's holding, it's holding, it's holding. That tells me there's some aggressive buying going on, and we're probably going to see a little bit of an uptick, at least short term. In which case, if I were short from here, maybe I want to think about bringing my stops in above this current high, or maybe even just punching out a profit where we are. So it gives you some great information if you're already in a trade. If you're looking at a signal, let's say we were looking at this sell signal here, it also gives us that kind of information. If we're looking to short, we want to see the wheel pull over here and hold and hold and hold. See, it keeps pulling to the buy side and holding. So we're likely going to see a little bit of an uptick here, I would think. So that's a brief overview of the Raptor and the Trailblazer. I already showed you the Hawk. Let me show you the Falcon. The Falcon is our swing trading tool. You see this trend line that runs through here. The trend line gives us our directional bias. So when it's green, we're looking to buy. When it's red, we're looking to sell. And essentially, we're looking for synchronicity. We're looking for the trend line to be in sync, the bar color to be in sync, the filter to be in sync, the signal to be in sync. That's what gives us our higher probability trades. Not much going on here again in the overnight. Oh, we did have a trend change signal here just about the time London opened. So we have our trend line change color. We have this characteristic little up, down, up pattern. The signal, unfortunately, didn't signal right here. It actually signaled a little bit late right here. But it was still enough in there that you could easily get your swing trading target. These horizontal lines that you see on here, this is a system add-on. Also, this is called the Ultimate Support and Resistance Suite. No, they are not floor pivots, and no, they are not Fibonacci retracements. They're much better. If they happen to coincide, it's really a coincidence more than by design. These give you your support and resistance areas, or your forecast support and resistance areas for the current trading day. There's an assortment of 21 lines. The gold line here is your median line. Then we have primary resistance and primary support. These tend to be kind of the main lines that you deal with every day. Once the market gets below these lines, it's going to tend to have a little bit of a bearish flavor. When it gets above, it's going to tend to have a more bullish flavor. Then we run into our secondary support and resistance lines. They're very useful as profit objectives. These will work with any chart style. So if you're running, say, a 15-minute chart and you want to know where the support and resistance is likely to be, well, you can use that as well in that way. Okay, we're getting another signal here on the Falcon. Oh, don't run away on me now. Oops, shoot, I keep forgetting to adjust that. So what I'm looking for now is I'm looking for a second, what we refer to as a second push on the entry. And all that means is I've let the signal engage. I know the current limit of the bar, and I'll look to sell, but only if there's some renewed momentum here. We'll see if they bring us in. There they go. Now, one thing I haven't touched on yet is this feature right here. These blue dots that you see, I'm going to turn that off for just a second. Oh, no, actually, I'll leave it on. These blue dots that you see, these are our stop strategies. We've got 16 different stop strategies on the Trade Manager and Trailblazer, and they're all customizable. So I'm going to dial that back a little bit. And you can see what happens when I click my accept button. It takes my stop from where I had it, and it's now going to manage this trade according to the stop strategy. So that means I really don't have to pay attention to this anymore. If this is where I want it, that's how I want my stop strategy to run, then I don't need to worry about it anymore. Let's say I want something more conservative. Let's say I want to go with the swing high-low. Well, I can use that strategy. Or if I want, say, the Chandelier Strategy, which is a more conservative strategy. You see, we have this preview button so that I can actually see what it's going to look like before I employ it. And let's say I say that looks better to me. Okay, well then I'll go with the Chandelier Strategy. And again, these are all customizable. You can change the settings however you choose. But what this does is it frees me up that I don't need to worry about this trade anymore. I've got a break even in. I've got my profit target set. I can now put that on the shelf and I can look at other opportunities. Let's say I want to look at what's going on in gold. Okay, well, I can bring gold over here now. I can look at the gold market and I can say, yeah, okay, I think I'm going to sell it or do whatever. Hey, way to go, Tony. Tony says he got this last macro pullback signal, took it down to the support and resistance line. Well done. So this signal right here, that's the macro pullback signal. One of our high probability signals again. And it's easy to identify because the micro line, that's this thin one, goes out of sync. But everything else stays in sync. So you see we've got red bars, red trend line or macro line, red filter, but a green micro line. That's a sell signal. That's a high probability sell signal. Way to go, Tony. All right. So the market's actually starting to look a little bit more bullish. I threw this in here so that you could see how it works. And if this market happens to turn, it is getting a little bit more bullish here. If this market happens to turn and head a little bit lower, you'll see that the Trade Manager will automatically start to roll my stops for me. Well, we'll have to come back to that. All right. Let's see if we're going to get a trend change here on the Raptor. I think we might. So the Raptor starting to make a little bit of a bottom. We still don't have any signal really to capitalize on here, folks. I'm just kind of showing you some stuff to pass the time. I'll let you know if we get anything looking extremely promising. All right, so you see here how the market has recommitted to the downtrend, at least at this point. This is normally the time that I switch to a more aggressive stop strategy, maybe something like parabolics, maybe like the bar high low, which is going to keep my stops a little handier. My logic is that if the market fails at this point, well, the sellers are going to lose control. So they're pushing down here. They're threatening the buyers again. If the buyers fail, in other words, if we can trade through the low here at 44.06 3/4, if it falls below the low here, then we're going to see the buyers exit. But right now, we're kind of putting the squeeze on, and they're going to tap me here in just a sec. All right. So we'll see now whether that is a full-on reversal or if I got a little bit too cute with my stop. For those of you who have been in the trading room with me before, you know that sometimes I get a little quick with my stop. But hey, that's me. Sure, absolutely. Ryman asked, Eric, can you show the E-mini with the Day Ranger? Just one second while I load that up. The Day Ranger is this tool that's up here in the top left corner of my Hawk. It is also a system add-on. The Day Ranger, it's a tool that gives you the average daily range. So you see your 30-day average, your 10-day average, your 5-day average. You get yesterday's range and today's current range. And what the Day Ranger does is it gives you an idea whether the market's expanding or contracting. So you can see 30-day average 238, 10-day average 158, 5-day average 155. So it does look like the market is shrinking a little bit range-wise anyhow. Yesterday was a big day at 227. Today's around 139. So how do you use this information? Well, if we see that the market is contracting a little bit, I'm going to say maybe the average range is going to be around 150 ticks. And let's say I wanted to take 20% of that as a profit target. I'm looking for 20% of the daily range as a profit objective. Well, if it's 150 ticks, I'm going to have a 30-tick target, right? That's going to be my objective. Likewise, let's say I wanted to have a 10% of the daily range as a stop loss. Well, that would be around a 15-tick stop loss. If I wanted to use my fixed tick strategy, I could run a 15-tick stop off of the high if I were shorting. So let's say 15 ticks off of the high. That's what that would look like. That would be 10% of the daily range. Cool, huh? Oh, while I think of it, Adam's just reminding me that there is we did a promotion last week, a presentation for NinjaTrader. And for those of you who weren't there, well, you get to capitalize on the discount, which ends this Friday. There's a 20% discount Adam is offering for any of the systems or the add-ons. And the code, let me enter this in the window for you, is NT20. There we go. So I'll send that all to you. So if you're interested in any of these, you can get more information at the Indicator Warehouse website. We've got a green bar sell right here, which, you know what, I might even look to buy. I know we're in a downtrend, but you see we're starting to drift a little bit sideways again. Notice with the trade manager and this risk component that I keep my risk contained. It will never allow me to risk more than 2% of my trading capital because that's what I have set right here. So regardless of whether I make my stop really tight, see the risk amount, or if I make my stop looser, see the risk amount never really changes. Okay, I'm going to throw that order in. This is not a bad order, folks. It's a little bit of a counter trend move. The green bar sell is a signal that we see develop near the end of a trend. The market has come down. We're drifting sideways. I think we might see a little bit of an uptick, certainly enough to try to take advantage of a scalp. And while that's going on, Ryman asked to see a day ranger here on the E-mini, and the ranges are 91 on the 30-day, 64.5 on the 10-day, and 65 on the 5-day. So there too, from the 30-day down to the 5-day, we are shrinking up a little bit. Yesterday's range 75, today's range 51. We are getting a little bit of a consolidation pattern going on here in the E-mini. Did get a first micro macro cross here out of the open. I do believe that found its profit objective without too much difficulty. Get down there. Oh, whew, wow. The E-mini is one of these markets. I'll stretch the profit target a little bit. I'll be a little bit more aggressive on the profit target. Okay, I think our order got filled. Yes, it did. And what I'm going to do is, just so you can see how the stop strategies work, I'm going to delete my break even and my profit target. All right, but we're going to remember that they're there. Those are our high probability targets. But what I want to show to you is I want to show to you how the stop strategies work. So let's say we're going to do the fixed tick strategy, and let's say we're going to run 15 ticks off of the low. Okay, now notice how it's just going to display on the wrong side. That's because the fixed tick strategy actually uses a moving average to try to determine what side of the trade you're on. So we're a little bit ahead of the curve here. To flip it over, you got to throw a little minus sign in front. So we're going to put a minus sign there, and that's going to move our strategy down to here. Now I'm going to hold off just for a moment. We're attempting to make a first micro macro cross signal, which is a buy signal. I'm going to hold my stop here below the low, just to try to ride out whatever kind of swing we might be looking at here. Okay, here we come with a red bar buy. So we're looking for the buyers now to step in and do something. Okay, that red bar buy has since turned into a yellow bar. As a rule, we don't really trade yellow bars on the hawk. The sole exception is the 4-arrow consolidation, which is tends to be a very strong pattern. Okay, we should see the buyers step up here soon. Sooner rather than later would be nice. No, they're not going to allow me to roll a stop for you. Stinkers. Yeah, we're not getting any follow through. I wanted to show you how the trade manager automatically rolls your stops for you. Let's see if we're going to get any buying pressure. No, the sellers are laying it on pretty thick. Oh, there comes a little buying. No, they're kind of waffling a little bit here at the moment, back and forth. And we're back down here to the support line at 44.06 3/4. This is now our fourth tap on this level. Once again, if the buyers fail to hold it, then we're going to see prices head quite a bit lower, I would think. And I think they just tapped me. Yes, they did. All right. Well, even though that trade did not work out as planned, when you're using the trade manager, you can take a little consolation in the fact that you did not lose more than you could afford. So, pardon me, you may not always be right, but when you lose, you don't lose more than you can afford. And when you win, well, you're always correctly capitalized to maximize your profit. That's a very important concept. And we're still kind of just drifting. What is it? It's only 7 o'clock. Crude inventory is out at the bottom of the hour. As we get closer to that, we'll take a look at crude. Right now, here's crude on the Falcon, and you can see a little bit of a downward drift. Had a late filter entry signal right here. A little bounce off the primary resistance, or pardon me, the primary support. And the warning dot, triangle, hash mark's hard to see because it's printing on the same line as our support and resistance line. But you could have set up your trade like so. Oh, you also have the opportunity to manually set your targets. So let's say, and a lot of people like to do this with the support and resistance suite, is they'll say, okay, well, I'll enter there. I'll place my stop above the primary support line, and I'm going to use the secondary as a profit objective. So they're very useful in that respect as well. And you can see prices have drifted down now to the secondary support. So crude oil still hovering around $40 a barrel. I'm gotten a lot more bullish on crude. I do believe personally that I think we've got a bottom in crude oil. Whether or not it will rally today, well, we'll see. But it does appear as though, at least from the looking at the daily and weekly charts, it does look as though a bottom might be in. Okay, we're getting a bit of a delayed reaction now to the lows. Technically, this is a first micro-macro cross signal. It is a high probability signal. I would probably not short it on the hash mark. I would short it at the very least below the last low. The reason being, we've got the sideways drift, right? You need to kind of balance your signal with the context of the market. So for instance, here's a macro pullback signal, the one that Tony took. Well, we have a market that is in a downtrend, right? Even if you just do a basic trend line, we've got a little bit of a downtrending market. We're near the trend line. That's what gives this trade perhaps a little more chance of working out. So if we set it up like that, okay, down we go. But look at that compared to what we're looking at now. First micro macro cross signal, yes, but look at what's preceded it. We've got a market that's essentially going sideways. Oh, and here's that rally that we were looking for. So unfortunately, my stop, I should have left it just a little bit deeper because we finally got that little bit of a rally that we were looking at. That's all right. We'll get a trend change going on here if in fact it's going to stick. We got a soft edge buy here on the Raptor already. That's our counter trend signal on the Raptor. And we're back here at the top end of the trading range. If in fact the buyers are going to take control, well, we should see a little bit more follow through from them. Still kind of a quiet sideways market, not exactly the kind of day that you're hoping for when you're having a demo room. All right, well, here's the first micro macro cross. It's just come into sync now. See, everything is in sync. This is, again, a little premature given the context. If you're going to enter it, you may want to enter it above the high. Risking it below the low is probably a good idea. What we're doing here is we're just kind of testing the waters, dipping our toe in. Again, the market very sideways. Remember how I told you the best thing to do in a sideways market? Let it break out. You'll get a second chance. You will. But we're in a demo room here, so I'm demoing. Let it break out, let it retest, then look for your buying opportunity. You will get a buy signal here. The DTS system will produce a buy signal. It's very rare that you won't get that buy signal. So the trade I'm attempting here is perhaps a little bit more aggressive, but I think it's got some potential to it. And it might even give me a chance to show you how the trailing stops work. So what I've done is I've turned on the fixed tick strategy as my stop of choice. No, they're not gonna tag me just yet. Come on, get in there. We do have a little bit of an opening gap from this morning's open. The market left off yesterday around 44.33. Hold on, I got the number right here. Yesterday's close, 44.35. Today's open, 44.22. So we do have a little bit of a gap above the market here. And markets do tend to try to fill gaps. All right, now we've got a stronger first micro macro cross signal. This one's stronger because you see everything is in sync now. We've got the warning dot. So the signal parameters are beginning to be met. They're not all met just yet. Come on, get up there. Well, that's how it goes sometimes. You certainly can't force the market. We'll put that on the shelf until it decides. The Falcon trying to produce a trend change signal. Again, kind of a sideways blah market. Ooh, I did see that we were trying to chew through some of these orders here on our Geiger counter. The dial is pulling over. Oh, no, it whipped back the other way. See how it's holding? It's holding, it's holding, it's holding, it's holding. That's kind of bearish. Now, if the market does not move lower as a result of this, that tells me that the buyers are absorbing all that sell pressure, and we're going to see a pretty good move to the upside. One other thing you may have noticed is the width of the bars keeps changing here. And you may be saying, what's up with that, Eric? Well, that's part of the dynamic equivolume bars. That's also a system add-on. These will work not only on the DTS system, they'll work on regular Renko bars, they'll work on tick bars, they'll work on 5-minute charts, daily charts, whatever, really. The dynamic equivolume bars shows you the volume based on the width of the bar. Now, I've just heard our order get filled. And again, normally I would leave our scalp target in play, but I'm going to turn it off in attempts to try to show you how this trailing stop feature works. You're going to notice that when the volume is heavy, you get these thick bars. That tells you there's a whole lot of trading going on there. What a lot of people don't realize is that when the market is trending, the volume is actually pretty light. See how thin these bars are when the market's trending? It isn't until the market starts to hit a serious support or resistance area that the bars get fat. And this really helps you identify where support and resistance is likely to be strongest. So we've had a really good tug of war here, as you might expect, at the top end of the trading range. And so the sellers took a whack because we have this bar here with the tall tail. We have the buyers trying to fight it back. We have this bar with the tail to the downside. And now we just have to give them a chance to try to get going. All right, maybe I'll go with the parabolic, or not the parabolic, but the ATR strategy. We'll dial it back a little bit. Yeah, I don't want to engage it just yet. If we are in a sideways range, again, I want to see the market get outside of this range before I get too aggressive with my stop. The market's like a big boat. It needs some time to turn around, change direction. I would have thought, given the activity of the last couple of days, the bulls would be a little bit more aggressive today, but maybe not. Okay, got a question here about the Geiger counter. So when the Geiger counter pulls over hard to one side and holds and holds and holds, and prices do not follow through, that means that all those orders are being absorbed and we can anticipate a move the other direction. So we had, I believe, the wheel pull here to the short side, to the sell side. It was here red and it was stuck. It was stuck for a good 3 or 4 or 5 seconds. and yet prices did not move lower. We'll see now we're producing a buy signal here on the Raptor. It's actually tripped. The Trailblazer, again, is the system where it's a one-click system, and I preset my profit targets and my contracts here, and then when I hit my buy market button, my order is initiated. I'll also place a stop loss. So now everything is in auto mode. But see, we're looking at this buy signal, and did you see how the wheel's pulling and it's holding, it's holding, it's holding? That's giving me a little bit of confidence there on the buy side, but I need to see that follow through. If that fails to follow through, see, it's holding. Come on, pull over. There you go. You're pulling. It's trying to chew through those orders. There, it's pulling over. It's holding. It's holding. It's holding. Come on, get over there again. We should see a little bit of follow through here in a moment as the sellers start to run out of ammunition, if you will. Now, if that happens, if you see it continually pull here to the buy side and there's no follow through, that means that all our buy orders are being absorbed, and we'll see the market tick lower instead. But I do believe that we're going to get that bullish follow through here in a sec. Come on, get over there. The market is kind of quiet. It's been kind of quiet the last couple of days, really. I'd like to say it's because of the short week. But I don't know. That's not much of an excuse, really. Markets get crazy quiet around Christmas, but not so much around spring and Easter. Come on, get up there. Here we go. Come on. Normally these things do unfold a little bit faster. Normally you'll see this and you'll see it pull and hold and hold and hold. And then within about anywhere from 15 to 30 seconds, the market will start to advance. But it seems like everything is in slow motion today. All right, we're going to put that up on the shelf. I'm not going to enable my stop. Well, you know what? I'll do the same thing. We'll go with the swing. Shoot. All right, I'm not going to enable that one just yet. And let's pull crude oil over here so I can show you the crude oil market. Now, we've got crude inventory coming out in a couple minutes' time, about 5-6 minutes. And you can see crude oil has kind of ground to a halt. Normally what I like to see going into inventory is that the market is in a little bit of sideways range, actually more like what we're seeing here on the NASDAQ. I like to see a well-defined sideways range with the market trading more or less in the middle. Then I can use our OCO function and bracket that range to buy above and to sell below. Right now in crude oil, I don't have that going on. So we've got, well, we've got two options really. We can use our support and resistance suite as guides to buy and sell. We can be ultra aggressive and buy and sell just above and below. That's a very tight little range. Or we can let the crude inventory hit the floor, let the market react, and then place our order, then bracket our trade. But you know what? We're in a, like I say, we're in a demo room, so I'm going to demo. Now the thing with the OCO function is these orders are live the moment I put them on my chart. I actually don't use the trade manager component to do this. I right click and I place my order. I right click and I place my order. Now you see here how it says OCO1. That OCO1, that means these orders are linked. So if I toggle my OCO and I want to do another set of orders, you'll see that those orders say OCO2. And like I say, these orders are live. I can take them and drag them wherever I want. If I cancel the one order for OCO2, the other OCO2 order also cancels. I think what I'll do is I'll use the support and resistance lines to kind of bracket the range. So I'll look to buy above the primary. I'll look to sell below the secondary. I better enable a stop and better make it a little bit of a liberal stop. Give us a little bit of room here. Just for fun, we'll throw a Geiger counter on here. Where are you, Geiger counter? There we are. So we'll put a Geiger counter up so we can watch the order flow. No real signal just yet, and you can see, look at how balanced the market is. Oh, well, it was perfectly balanced there for a moment. Okay, crude inventory should be coming out any moment now. Now, what I would normally suggest doing is letting the report hit the floor, let the fur fly for the first minute or so, and then bracket. But like I said, one of the luxuries of being in a demo room is that I can demo stuff without worrying too much. Okay, the Geiger counter getting a little bit on the bullish side. Don't have the trend change signal in play just yet, but it's getting there. And we're going to see these numbers start to get a little crazy here in just a minute. Should be any second. Yeah, the order flow is still very small. Oh, I saw a 20 block go through there. There we go. So now the inventory report is released. We're actually getting a sell signal here. We had a late filter entry signal to the downside. We'll see whether or not that follows through. If in fact the market's going to maintain that little downwards drift today. Okay, so it looks like this is going to be the high for the report, so we can roll our stop in there. I'm going to change my stop strategy up a little bit because I don't want my entry and my stop to be too close together. Sometimes that fools the trade manager and it brings you in and stops you out right away as your stop is placed right where that order is. Best to have a little bit of space between the two. Okay, now the report is kind of given us the bottom end of the trading range. Oops, a daisy. So we'll throw the sell stop in there. All right. So, oh, we hit our break. Oh, shoot, I didn't get a chance to adjust my break even. I should have nixed my break even trigger. The market went up, hit our break even. I'm going to just simulate this trade again. I'm going to delete the break even. I should have had that break even turned off. So we engaged the order and the market looked back just real quick, tagged the break even stop. Now I can go with my more liberal stop again. So working on a possible trend change signal as well here now on the Falcon, but we do need to see those buyers come back. Come on, buyers, where'd you go? There you go. Come on, give me that buy signal. This is the joys of trying to trade crude oil. Oops, that's not what I want. I'm going to leave my stop just down there. Below the secondary, below the swing. Oh, come on, buyers. What happened? No, and now they're going to drift sideways as well. Well, what we'll do is I'll put this up on the shelf here for the moment, and we'll come back to that in a little while. And I do believe we hit our profit target. It looks like we hit our profit target here on the Raptor on this little run up. And did we hit our break even also? We must have hit our break even. And then we got stopped on that little bit of a reversal. So it looks like our Raptor trade worked out okay. Hey, way to go, Tony. Tony says on that oil trade, he says, I set my OCO much tighter than yours, and I got 26 ticks to the downside on one contract. Well done, Tony. Nicely done. Okay, unfortunately, what I should have done here is I should have left my profit target in play, or while we were watching crude oil, what I should have done is gone to a more aggressive stop strategy. But you can see we had a nice little run up here as well. Had a couple signals. We had our first micro macro cross signal, which is the one that we took. That's this one right here. Took a little bit of heat, but it rallied up, hit our high probability target. If you tried to run it out, we got a second chance here, both on a macro pullback signal. That's this one here. Remember where the trend line changes color, and the red bar buy signal, which in this case turned out to be a really good red bar buy signal. Great follow through from there. also was our 4-arrow consolidation. Not to confuse you, but the 4-arrow consolidation, whenever you get a market that's making kind of a bull flag or bear flag type shape, a pullback type shape, we start counting the buy signals or the sell signals, as the case may be. Here's number 1, there's number 2, there's number 3. Number 4 is the one that we're really interested in, because from that 4th signal, that's usually when the market really starts to go. And that's what we saw happen there. All right, so they tailed off a little bit, kind of checking out the bottom end of the trading range now. It's funny, normally we see some of these markets move opposite each other, but today everything is in sync. The E-mini is in sync, the crude oil market is in sync, everybody is moving in sync. Here, we haven't looked at the Eagle very much today. The Eagle is our trend trader. And, well, I guess the reason we haven't looked at the Eagle so much is there hasn't really been much in the way of a trend signal. This green bar sell off of the hard edge, that's probably been our best opportunity so far. This band that runs through the Eagle gives us our directionality. And whenever the market encounters the hard edge, we anticipate some sort of reaction. So this green bar sell, green bars with a sell signal, you see that? They're red dot and a red triangle. That's one of our higher probability type signals. Let's see if I can find you a better example. Well, here's a couple of green bar sells. They all kind of triggered in a row. Market went a little bit lower. That's not, usually we anticipate better follow through than that. Here's the opposite. Here's the red bar buy signal that occurs in an uptrend. So you can see our band is bullish. Market moves up, retraces into the hard edge, produces a red bar with a buy signal, and away we go. This tool you see up here in the corner, this is called the Trade Forecaster. Now the Trade Forecaster is, well, it tries to forecast the current market environment and what the next one is likely to be. So according to the Trade Forecaster, we're currently in trend mode for about 8 minutes time. So it's going to die out here in a moment, after which we're moving into swing mode. So what that means is we can anticipate a little bit more follow through and also perhaps a little bit more choppiness in the pullbacks and whatnot. It's been a funny kind of morning. Very often when the market is like this, the afternoon will tend to be a little bit more aggressive than the morning session. Let's see what's going on with the soybean market. We'll throw soybeans up here real quick. If you're a day trader and you're looking for a way to diversify your trading, soybeans can be a great market to follow. It's still a little bit quiet. We're starting to get into that season, however. We did get a macro pullback signal here yesterday as soybeans were opening. Exceptional follow through, came back with a red bar buy signal. Also decent follow through on that. Nice thing about soybeans is that once they settle on a direction for the day, they pretty much stay with it. Most of the swings are, fairly well contained. Here was a first micro-macro cross that came in about an hour after the open. You can see prices tailed off. And at 12.50 a tick, you can get some pretty decent moves. But as I said, soybeans are a little bit quiet right now. It's not unreasonable to see anywhere, well, $1,000 moves in soybeans per day. So like I said, if you've never looked at the soybean market, you might want to give them a second look. But right now they too look to be a little bit flat. The gold market giving us some very decent signals. Here on the Falcon, here on gold. Nice little trend change signal. So you see our trend line. This one's practically textbook, by the way. We go from red to green. We have this little up, down, up pattern. Print our signal, and away they go. That's ideal. Exactly what you're seeing there. So very clean signal out of the gold market. Nice first micro macro cross right here. Again, very high probability signal in gold or any market on the hawk. Very high probability signal. You can, it's the kind of signal you can almost take without exception. There's one. Where's that first micro macro cross? Oh, now look, this one gave you some heat. It actually worked itself into a macro pullback signal. Here's one in the midst of all this sideways action. You would have got your profit objective, but not much more. Here's a nice first micro macro cross. This one had very good follow through after a little bit of a sideways drift. Here's another one. Hit its profit target. Here's another one. So you can see it's a pretty reliable signal. Like I say, one that you can take with a great deal of confidence. All right, do we have anything else going on here at the moment? No. Still got that little bit of a sideways flavor to the market. They've tested the lows, they've broken out, looking for a reaction and a possible move lower from here. We're not expecting a news announcement today, are we? The market's almost trading like it's waiting on some sort of news. Possible trend change here in the Falcon now. We're getting our trend line changing color. We don't have a signal yet, but we're getting there. See, the nice thing about the DTS system is that you get plenty of warning. You're not usually scrambling trying to get a trade in. You get lots of time. You see the trade coming from a long ways off. Okay, we're going to get a green bar sell signal here that we might be able to short, or pardon me, buy the failure of. It's just one of those blah kind of days. You get them from time to time. There's nothing you can do about it. Remember, your job as a trader is only to take what the market is giving. You can't make the market do anything. Well, they kind of fallen flat here again. So I think we may button up the room here in a few moments. If anybody has any questions, please type away. We'll hang out for about another 10 minutes or so. See if we get anything interesting going on. Oh shoot, that green bar sell keeps fading. It's showing me a green bar for a moment and then it drifts away into yellow bars. All right, well, we're starting to get a first micro macro cross higher here. We're into the hard edge on the Eagle and the Raptor, which, remember I said we normally anticipate some sort of reaction there. We are producing buy signals, though, coming into this hard edge. So the structure is a little bit weak here, but now it's starting to drift a little bit. What we're essentially looking for here is the market to fail and head higher. That's what we're looking for it to do. No, now we've drifted into yellow bars, so we're essentially gone neutral again. Oh, red bar buy. This is the last chance for the buyers to pull it together, and this will be the last trade that we'll look at this morning. If in fact we get that red bar buy following through. See, with my little handy dandy logic counter, that's these prices at the end of the bar. I know where the bar is going to finish, so I can already anticipate where the hash mark is going to print, so I can get my order in. No, they're still drifting. Still got a red bar buy signal. This is again on the hawk. Looking for a little bit of an uptick, and they're not going to give it to me. So if they don't turn it around at this point, this red bar buy signal is going to fail. And we'll just end up in this sideways drift. All right, there's the red bar buy signal. Let's see whether or not they have any follow through. Oh boy, if this isn't painful this morning. Oh my goodness, they actually filled the order. Let's see where we are relative to our support and resistance suite. We're right back at this very popular number today, 44.06¾ That's our secondary support line. Let's see what's going on with our Geiger counter. Yeah, the sellers are trying to load up. Oh, there's some buying pressure. Oh, they're still fairly evenly matched here at the moment. Yeah, like Tony says, you'd think it was December 20th. No joke. Yeah, December 23rd, not March 23rd. I'm just looking for a scalp on this one. We'll leave the profit objective in. We'll leave the break-even trigger on. We'll use the swing. There we go. So we've got the swing strategy in play. Oh boy. Well, you know what? I'll just continue to nurse this one. If you are trading this afternoon, well, I still think we're going to see the market try to get into that gap. You know that? Given this sideways action that we're seeing, the lack of a real downtrend at the moment, I would not be surprised to see the NQ put in a rally this afternoon. At the very least, it's going to continue to go sideways like this. So, you know, don't get too crazy one way or the other. Thank you for your attendance here today. I'm sorry that the market wasn't a little bit more active, that I couldn't show you a few more things. DTS owners, I will see you in the trading room tomorrow morning, and hopefully the market will shape up for us a little better at that time. I'll talk to you then. Bye for now.